Hello, everybody, and welcome to our April roundtable. We are once again back with our favorite guests, my co-host John Pisalis of Velocity Realty in Toronto. Hi, John.
Hello.
And of course, as always, Steve Saretsky holding it down out in Vancouver, Oakland Realty. Hi, Steve. How are you doing?
Good to be back. Yeah, doing well, you guys.
Good.
Good.
Are
Lots to
yours?
talk about.
They hate in my comments sometimes that I talk about weather, but I'm Canadian, so I don't know why that's wrong. Our spring takeoff is bumpy. It's full of ice, rain, snowfalls, and then spring days. What about yours?
Yeah, no, it's been a pretty nasty March, just raining like literally every day. I think we're starting to make the turn here, which is exciting, and hopefully, hopefully making a bit of a turn on the housing market as well, because it is
See?
pretty ugly. So we'll get into that, I'm sure.
Yeah.
That's my segue, indeed.
Mm-hmm.
I beat you to
Has
it.
March been equally nasty for you, Steve, out
100%.
in Vancouver? Let's go to a market update from Vancouver.
Yeah, just looking at the sales figures, obviously recording this today, what, April 1st. This is not a Fool's Day joke. So we had home sales for Greater Vancouver, the lowest in, I have data going back to 2000 here. So the lowest in 25 years outside of March of 2020. Of course, that was the onset of the global pandemic there. So March home sales were abysmal, quite frankly. There's no other way to put it. New listings were above the long-term average. I mean, nothing like crazy dramatic, but just looking at that, so new listings are obviously higher than normal. Sales were abysmal. So inventory is growing. We're seeing downwards pressure on pricing almost across the board. Again, there's certain pockets of the market that I still think are holding up better than others. And that's like predominantly sort of your entry level detached house, which seemingly everybody still wants. So that segment seems to be holding up better. You know, we're looking at cancellations in terms of people saying, "Oh, okay, I've had my condo on the market for 3 months. Why don't we cancel the listing, terminate it, and then relist it again at the same price and hope that we get some new eyeballs, or maybe we relist it 20K lower." So if you look at cancellations, those have spiked as well. So kind of all these indicators to me point to a market that is struggling right now.
Do you call them cancellations or relistings when they do the same listing back on for the same price?
Yeah, I mean, yeah, we call it like a relist, like a
Yeah,
cancel relist. So
interesting. We call them relistings in Ontario, don't we, John? And I think we've been seeing the same here.
Oh yeah, tons. Especially with condominiums, a lot of cancellations, a lot of people just listing them for rent that they can't get the price. I mean, looking at the stats for March, I mean, very similar. We were actually lower, I believe, this year than in even in COVID. Because
in
I
terms of
mean,
March sales.
March COVID was sort of the last kind of run up before kind of the lockdowns, I think, and April is when really things plummeted, at least here. Um, but yeah, I mean, typically March you have like 9,000 plus home sales. Um, I think again, like preliminary stats were about 4,900-ish, so just over half, which is it's terrible. Like we're like 20% below or 25% below last year. And last year was a terrible year, probably close to like a 20 plus year low. So very, very sluggish sales volumes. Again, I think part of this again is all of this uncertainty. I think it's really we've talked about this. I think it's really pushing a lot of people to the sidelines.
Mhm.
Um, especially people who need to upsize, want to upsize. It's a very tough environment to do it. The people who are doing it kind of need to. But a lot of people are just a little bit anxious and waiting for a little bit more clarity and certainty. And I mean, we hear this even with our own clients, like some worried about their jobs or they do feel vulnerable, right? And when there is a lot of uncertainty, you feel vulnerable, you don't necessarily want to upsize.
Well, it turns out scrapping with your best friend and trading partner when you're a trading nation is worse than a global pandemic
Oh yeah,
that might
actually,
take you out.
you're right. Actually, I mean, in some way, it is worse because you're right. The decline in volumes is kind of at least on that level. You know what I mean? Of the beginning of the lockdown. So yeah, kind of it's unbelievably slow right now.
And I don't want to beleaguer the point. I do wonder with COVID, like, the reason I think, John, you were still seeing decent numbers in March is I believe the global pandemic was declared pretty late. Like, I remember flying out of New York when Trump finally shut down
Yeah.
and stopped European travelers. And I
Mhm.
believe that was towards the end of March
March, I think so.
2020.
Yeah. Yeah.
So the immediate shock, we really felt it, and the OMG, like, what are we going to do in
Yeah.
April?
And
So that makes sense. But then the longer that lockdown continued, we all learned how to work from home. All the stimulus payments started flowing through,
yeah,
and
by
it's like
the
we got used to this new normal. The
yeah.
chances of that happening, what do you guys think? I think it's so different right now.
I think, yeah, I think we talked. I think we need a sustained period of stability and clarity from the US. Like, I don't think, the big liberation day is going to come. There's going to be some announcement. We're going to be like, okay, this is done. We don't have to worry about tariffs again. Like, I don't think that's going to happen. I think we need a longer stretch of that before people feel confident again. And one thing I'll add, because sometimes we have clients who watch this and they hear me talk about the market being slow and they're looking at buying a home and the market doesn't feel like slow to them. So like in some low-rise home neighborhoods in Toronto, it feels competitive because the nicest homes are still like we had a client that's looking at a home last week had 12 offers on it. Like, again, starter home price point. So some homes in some areas are still competitive, but as a whole, the market is slow. I think that's all I'll just add to
I
that.
I
mean,
was
John, I think the same thing for us. We've had like a couple buyers in the last 3 weeks where, entry level price points, entry level condo in parts of Vancouver that are desirable, 4 offers, 5 offers. Again, not going for record setting prices by any stretch of the imagination, but like still competitive, still selling on day one, day two on market. And then you've got other listings that, like literally we've had stuff where like we've had it listed for like a month and we've had one showing. And so it just really depends, I think, on the product type. But as a whole, yeah, if you kind of lump the entire market, it's a grind. And we're looking at months of inventory right now. In Vancouver, we're almost about seven months of inventory for sale, which for Vancouver standards is quite high. So, I mean, that suggests there's going to be further downwards pressure on prices.
Yeah, and we are at what are we at? Well, I'm just looking at it right. Yeah, we're at like 5 in Toronto for months of inventory, which is also quite high for Toronto.
And sorry, for both of you, the year-over-year price change? Average home,
I
average
think we're
condo?
down slightly if
Let's
you
take a
break it out
look.
by house type. Yeah,
So
I don't have it
still
in front
only
of me. Like it's
slightly.
modest.
Still hanging in there.
Mhm.
That's interesting. Now, John, I just want to get back to one of the segments we're always watching here in Toronto, especially. Steve, I think you said it's a smaller part of the Vancouver market, which is newly completing condo buildings. As they come to completion, the owners now have to take on a mortgage. And I think, John, there was a headline news article today about in the Toronto Star, a fellow that cannot close on a $750,000 unit, and he is being sued by the builder. And the article mentioned that this is now picking up in the Greater Toronto area. So, any
Yeah.
comment on that story and what that might mean?
Well,
Will we again see that part of the market trigger something bigger in the condo market?
listen, people don't realize what they're getting into when they buy a pre-construction condo or any real estate. They think if it defaults, they can't close, they just walk away. No, the builder can go after you. They're almost 100% going to win, which means if you owe them 300 grand and the only 300 grand you have is in the equity of the home, they're going after the equity in your home and you got to sell your home and move into a rental. And we saw this happen in 2017 in Toronto when people defaulted on deals. They bought 2 deals. People got sued for hundreds of thousands and they lost their principal residence. So, again, people think of real estate as this riskless, always goes up, let's not worry about it, especially pre-construction where you're buying something that's closing 5 years out. It's highly risky as we're seeing now. And a lot of these people are going to be in a very difficult spot. Steve.
Well, it's funny because you mentioned that, and I think it's a good point. We're starting to realize that, oh, wait, maybe these pre-sales are actually inherently risky. They come with risks. So shouldn't you, as a buyer, be incentivized or compensated for taking on that risk?
100%.
The market's obviously been so flipped over the last, what, 6, 7, 8 years,
More than
where
that, when we launched, John was writing about that.
Yeah.
that for some
What
reason
has it been,
the
10
whole
years now?
inversion
Yeah.
of new builds costing more per
Way
square
more
foot.
than resale.
Yeah,
I
Yeah.
mean,
and
it's
this was
obviously
when
gotten,
back in 2007.
Yeah.
it's got what? Yeah, I mean, it's gotten
It's
incrementally
gotten worse.
worse.
Yeah.
Yeah, where now you're paying, on these like high rises in good locations, right? You're paying 10 to 20% higher than market value, than current pricing. So you're really just expecting this market to continue to rise. And so I think that's, obviously where we're seeing all the issues today is people paid above market value and the market didn't go up, it actually went down. And now you've got this huge shortfall and you multiply that across however many units are under construction and completing and it's a mess. And obviously, I mean, it
Yeah.
seems to
And
be
it,
worse.
in Toronto, the spread was probably even higher than Vancouver. Like people were paying 40% more than resale like 4 or 5 years ago. And with resale prices flat, that's why they're not worth what they paid for them because prices haven't gone up, you know?
And
Um,
do we add to that mix the fact that rents are falling?
well, yeah,
And
exactly.
there's two issues there now. Of course, we know that some of the temporary immigration, we've seen that cut back, and that's part of that story.
Mhm.
And the other story is again this flood of fine completions are at an all-time high. I believe John's still in
Mhm.
Toronto for condos, and that's coming against all these new purpose-built rentals
Yeah,
coming online
it's
and
true.
increasing.
Well, that's the
So
challenge, right? Is now
yeah,
you have
perfect storm, right?
Yeah.
we've got 20%. Let's say if the condo developer was selling at 20% above resale, the market's almost like the market slash the developer is basically almost anchored at that sort of price now. So like moving forward, future projects, it's like how do you get the cost of construction down, the land price down? It's going to take years to kind of that market to kind of rebalance and readjust to get pre-sale buyers back in. That's why I think, yeah, I mean, we'll probably get into it in the show, but the future of new housing supply, I think, is going to be impaired for years.
Yeah, it's gonna be challenging.
Well, but before we get into the supply question, I want to just return back to the price. So back in 2017, 2018, John, when we saw that spike in which you mentioned buyers got caught out, there was a lot of speculative activity on single family homes, especially north of Toronto
Hmm.
in the York region area. And some people got really caught in some really sad stories. It's really sad what we're seeing now,
Hmm.
but then it got contained.
Yeah.
My question for you is what is the prospect of the new build, the spill out of
Way
this now
worse.
completing,
Way
and
worse.
and can
Yeah.
it spill over and affect resale condo prices?
It can have a, I mean, I don't know how it's going to, I think the sentiment could be negative. At the end of the day, when we think about people who got caught in two transactions, I think I did a report on it, how many like
The sticky end, you
yeah, so
named
you're
your
right.
report.
And listen, it was a small, relatively small number in the grand scheme of things, people who couldn't sell their homes who defaulted, right? But here we have like tens of thousands of units. So the effect is going to be much bigger. How it spills over to resale prices, I don't know. Like I don't necessarily know because at the end of the day, those units will complete. But what's going to happen to them? Will they be rented? Will they be sold? We don't know. So it's going to impact obviously rentals or sales. But yeah, the impact just more broadly. If you start hearing stories of people defaulting, they're getting sued by the builder. It's not good for public sentiment when it comes to new housing. Like, people start thinking against taking a second thought about investing in pre-construction condos when everyone now has lost money on them, right? So,
I would also argue, John, if I'm in the market for resale condo, and viewers of the show know that I'm always out there circling above the Toronto skyline, uh, isn't there also the problem of us waiting to see where the bottom might go? Because if you think there could be a slide, like even in
mhm.
the resale sector, it makes me more hesitant. Like I'm still waiting for the price drop,
Well, I
basically.
think a lot of people are waiting for the price drop. I think that's partly why sales are so slow, right? Like, I think especially with condos, some people are wondering if prices are going to drop. So, yeah, and I don't have the right answer to you because I think what happens is once prices have been sticky, right? Once prices start dropping, then people are more reluctant to get in because they think maybe it's going to go further. But some people do jump in because you can't freaking time this. You know what I mean? Like, so yeah.
Last comment on that. I was able to verify with our broker, mortgage broker specialist, Dave LaRock, that Canadians do have more of their COVID savings still. The Americans have run through them. I'm wondering if Steve, starting with you and John after, some of these buyers that are still raring to go on these single family homes, are they people that have been holding off on their decision making for the last 4 or 5 years of uncertainty?
Mm,
I would think so. I think there's still pent up demand for
yeah. I
sure.
mean, there's
There is.
people there. I mean, you go to some of these open houses and you still like get 10, 20 people at them and then just no offers. I think people are just finding reasons and excuses not to step up. And same thing, you get even when you do get an accepted offer, like people are finding any little excuse to sort of talk themselves out of the deal and back out. So I think it's just at the end of the day, it's it's uncertainty. People hate uncertainty. Obviously, the economy isn't in a good spot, and so I think this too shall pass. It's just a matter of like how long. I've sort of framed it as somewhat of a policy shock where anytime you sort of get these policy shocks, the market basically just freezes and there's really not a whole lot you can do as a seller. Um, we had it in the foreign buyer tax where the market basically just froze. The market just froze for three months. Like just didn't matter what you did, you can drop your price because it does not going to sell. So the market froze for 3 months. I think we saw that again during the pandemic. The market froze for what, 2, 3 months, and then it kind of unthaws. I'm not saying that we're going to unthaw and go to a boom here, but have call it 25-year lows in sales. I mean, that's probably not going to hold up. Like sales will recover, but they're not going to bounce back to maybe their long-term averages right away. But I don't think you're going to continue to run at 25-year lows.
All right. So we've talked about why we're in a period of uncertainty. When does that, when does that start balancing out so we get to that thaw? Does the Canadian federal election help in that regard at all, in your opinion? So knowing who will win at the end of the month and be the prime minister while we are negotiating with the United States president, does that provide any kind of more clarity, or do you think it's mainly the direction from the US that's still going to impact the market?
I think it's the direction from the US. I don't know what Steve. I mean, I think that
I mean, I think it still helps to give people at least a little bit of certainty and clarity that okay, this guy's going to be running the country and he's going to be negotiating with Trump. I think it gives people like a little bit more. Obviously, I don't think the reason we're in this like really soft market is because we don't have like an elected leader. Um, I think it's more to do with like tariffs, uncertainty. Is my job going to be safe in a month or two? I think that's the bigger challenge right now.
All right, so guys, we're heading to the polls as Canadians. You have to help us out.
Mhm.
Have to
Do it.
evaluate some of the big differences that we're starting to see emerge from the unelected but leader of Canada right now, Mark Carney, leader of the Liberal Party. So upon winning the Liberal Party nomination, he is now our prime minister, and he is, of course, heading off against Pierre Poilievre, longtime opposition leader of the PC Party, the Progressive Conservatives. So, a couple of different approaches to some big items that have an impact on housing are starting to emerge. So, I want to get your takes on some of these. Let's start with removing GST on new housing. Which approach is the right one? The Liberals plan to remove it for first-time buyers purchasing a home under 1 million. Conservatives plan to remove it for any buyer for homes up to 1.3 million. John, I'm going to let you start this one. Steve, you'll get the you'll get the jump next time.
Okay.
So the level. Listen, I think the 1.3 is good if you're looking at buying a home in Toronto or Vancouver. 1 million is not good enough. The problem with the Liberals too, they really set it up so you only qualify if you're buying under 1 million. If you buy for $1,100,000, you got to pay the full HST at least or GST. That's how they've proposed it. I think that's kind of silly. It should at least be on the first million is sort of no GST. So if you buy slightly above it, you're not paying that first million. I like the fact that it is for first-time buyers rather than everyone. I think it just gives first-time buyers a bit of a leg up. A lot of even our suburban homes have been bought by investors, which I tend to think is not the best thing because those are the homes that families want to buy. So give them a slight advantage. I don't think is a bad thing. So yeah, I kind of kind of mixed on both. But yeah, I think the idea of it is good. The GST for everyone, and just to clarify, the GST is really on only new homes. There's no GST on existing homes. We already do have a cap or a rebate on the first 450, and it's kind of tiered somewhat. So it's really just extending that from 450 to a million or 1.3. So I think generally both it's a good approach.
John, is that cap right now for all buyers? I remember there was a bit of a funny formula to it.
So technically it's only on end users,
Right.
right? And investors have another program where they actually have to pay it, and then after they've rented it for a year or so, they can apply to get it back, right? But what actually happens, at least in Ontario, I don't know what happens in BC, everyone just lies. Basically, it's like they declare that they are going to move into it and then just rent it. And because the CRA is not going to be auditing tens of thousands of people every year, so people just lie and they get the rebate. So that's why I've seen some like economists say, well, this should be for end users, not just first time buyers. But that's basically saying like make it for everybody. Because unless you're cracking down on the fraud, it's basically what we have today. So.
Is that HST you're talking about?
Yeah, I mean GST, HST, yeah.
Okay. So yeah, obviously we don't have HST in BC. We just have the GST, which is the
Yeah.
federal tax, and then you've got your property transfer tax as your provincial tax on real estate. There's some exemptions there for first-time home buyers up to a certain price point, but the price point is almost so low now that it's really not that relevant. But yeah, I mean, I think John and I tend to agree on sort of how to fix housing. Sometimes it's always, sometimes it's a discussion of or debate of how best to get there. I mean, obviously my thoughts are on the GST is that, I understand John's point is like, well, if you sort of keep it to first time home buyers, you at least give them some sort of competitive advantage. Whereas on the conservative side is you're saying, well, just give it to anybody and everybody. If you buy a new home under 1.3 million, the counter argument to that is obviously people that buy most of the new housing today are, as we talked about earlier on the show, they're taking that risk, right? They're taking the pre-sale risk of buying a home and waiting for it to deliver 4 years down the road. And so the reality is, until we change this funding model, which I don't think it's going to change anytime soon, is banks require developers to pre-sell 65% of the units. And I think it's just really hard to get first time home buyers to take on that risk. Most first time home buyers want to move in tomorrow. They don't want to wait 4 years. So what I'm saying is we need these investors ultimately to fund the construction. I don't necessarily agree with the model, but it is what it is. The model that we have in Canada, I don't think it's going to change as much as we want it to change. And so coming full circle, John, I guess the argument on that side is the more sort of supply that you can deliver to the market, whether it be end user supply or investor supply, the more units you can deliver, it should ultimately lower the rate of return on housing moving forward. Obviously, more supply coming to the market. So it's kind of like, how do you get there? I mean, I would argue the reason that we have all these investors in the Canadian housing market to begin with is because the returns have been so good for the last, 2 decades? Particularly in the last 10 years, is that now you've just brought in all this speculation into the market. And I think what's ironic is now that because there's been so much speculation, we've actually created too much supply where you're seeing it now, right? We're talking about all these units that are completing and they're all underwater and rents are coming down and there's more coming to market. And I think that's going to create this lost decade for real estate, which is to say that I think there's going to be little to no price appreciation in real estate for the next 10 years. And
10
that's probably
years.
going to, well, I mean, I think if you think about it, it peaked in 2022. So we're in year 3.
Yeah, okay, sure.
And I've seen product in like downtown Vancouver peaked in 2018. So we're 7 years in. Detached homes on the west side, where a lot of the Chinese money flooded, that peaked in 2016. It's dead. You can't, like, you're selling today at best a break even 9 years later. And so I think that what's going to happen is that you're going to be in this lost decade. And I think that's going to ultimately take care of the market, which is to say that people are going to be pretty reluctant, I think, to buy condos, investment condos
Sure.
moving forward.
So, and I don't agree with you. I mean, you need investors potentially to buy pre-construction condos. I think my point is this. Number one, you don't need that tax incentive on low-rise homes because those can be bought by families. The
Mhm.
construction cycle's a year. And a lot of investors are buying low-rise homes, right? So we don't really need to give them a government tax
What
break.
are they buying in the GTA? Because I'm just curious. I can
They're buying,
obviously
they buy
speak for them.
townhomes and semis like out in the suburbs. Like a,
Yeah, can't say we have a ton of that because I look at it and say, well, you're going to buy a townhouse in, I don't know, Fraser Valley for $1 million brand new and rent it out for like 4 grand, I guess.
well, I think most are doing it for the capital gain, or at least they were, right?
Yeah,
Yeah.
yeah.
But aside from
John,
the
even
low
at that
rise,
price, they were doing that.
yeah, they were. It was
The
all
amount
But
capital
is
of
that,
gain.
John, is that a
investment.
scenario where the market takes care of itself, which is like they thought they could make some money off it. And I think they're soon going to realize that, oh crap, I'm not making any money. I'm actually going to lose $150,000 here.
Sure,
I'm not going to do that. I'm not going to make that mistake twice.
sure. But I think my broader point is if you're giving a GST rebate, which is effectively a taxpayer subsidy, right? Like, should we be giving it to end users or to investors? And my feeling is end users. And with respect to the condos, I think the broader point, my broader point is the way we've been building rental properties the right way, selling off micro condos to mom and pop investors. And I would argue it's not. The better way is this institutional money that's building purpose-built rentals because they'll actually build larger units. They're not going to build 400 square foot studios exclusively, right? So I think it's a better long-term way of building permanent rental housing versus this speculative pre-con condo bubble of people paying ridiculous prices. So I think that's my broader point.
Yeah, and that's a fair argument. I think what we're seeing now is obviously the purpose-built rental market. Uh, to the credit of the Liberal government, probably the only good thing they did for housing was the CMHC uh, MLI Select rental program, which
Mhm.
effectively gave developers subsidized, cheap, basically call it cheaper loans through CMHC to build long-term rental buildings. And there's so much rental supply now. I think it's at what all-time highs
Mhm.
in terms of units under construction.
Yeah.
That that is basically obviously now I think we're seeing the effect, which is it's bringing rents down almost across the country. And so now it's kind of pulled the froth almost out of that speculative pre-con bubble because now as a pre-con guy that's going in there and buying a little one bedroom, you're like, well, I'm now competing with all this institutional supply that is coming to market and driving rents down. And why would I go in and buy a micro one bed? And so that market's effectively shut off. And now developers are what I'm seeing in Vancouver, anyways. The only development that's getting built today is this ground oriented duplex, multiplex things that end users are actually living in and using because that's where the market has shifted to.
And you're not still seeing investment in those units, Steve, like John was talking about in the suburbs,
In the
in those kind of.
no, not really. I mean, the stuff that's selling today is basically like more end user type products. So it will be low rise like duplexes, 3 bedrooms where the families obviously where I think we haven't been building, right? So now that we're actually building them, there's obviously a demand for them. And then we're seeing decent absorption in low rise wood frame condo buildings. So call it 5-story wood frame where the developer can actually sell these units at a more reasonable price point where it starts to actually pencil and make sense, not only for an investor, but for an end user. Like the problem with the high rise condos is like the prices on them are just so high, right? I mean, you gotta like in Vancouver, you can't pre-sell a high rise concrete condo for less than 1,600 a foot minimum. So like there's just no market at 1,600 a foot today, but there is a market for wood frame at 1,100 or 1,200 a foot.
And before we move away from this topic, John, this is interesting. If we still see some investors interested in those townhouses, those semis, and those rows, especially in the suburbs
Mhm.
of Toronto, when we say the suburbs, these are massive communities,
Mhm.
very linked to Toronto.
Mhm.
I don't know what the divide between Fraser Valley and Vancouver is. But when we say the suburbs of Toronto, they are not delinked. They are not way out there. These are where lots of people live, even those working downtown. Uh, do you think this plays well? It may be even best in this kind of market where first-time buyers are still worried that they're going up against maybe an investor going for a property or two.
Well, yeah, I think from a political perspective, I think it does play very well. It gives first-time buyers a break. Listen, and I think it's very different from saying, like I said before, that this applies to end users and downsizers, because everyone can lie about that. But it's at the end of the day, when you're buying, you are either a first-time buyer on completion or you are not. You know what I mean? You can't change your mind about it. So, this is kind of why it works. I think again, like it's not even that bad because pre-con condo sales are gonna be dead for years. No one's buying those. So it's really mainly just low-rise homes, which are should be owner occupiers predominantly, I think. I don't think we should be selling them off as assets to the wealthiest. At the end of the day, this is why people are moving all across the country because they can't afford a home where they grew up.
Interesting. I mean, and let's leave it there for now because I think this does point out something very interesting. When the federal government acts, it acts at the federal level, and yet the differences in housing markets
Mm-hmm.
across Canada will maybe make a difference in how the average voter will feel about those
Mm-hmm.
different initiatives. So that's a really interesting thing that kind of breaks out. Let's go on to the next battleground, capital gains. So we have Carney saying he will roll back Trudeau's capital gains in tax increase. So just to remind everyone, late last year, Trudeau's Liberals said they'd increase the rate of taxation from 50% to two-thirds for corporations, and for individuals, the increase applied only for gains above the $250,000 mark. Carney has said that this policy will, quote, not move forward, end quote. So that is all that's been said, I think, so far on that side. On the conservative side, Poilievre announced something very interesting: Canada First reinvestment tax cut. Poilievre has announced his proposal, which is that deferred capital gains will apply when you reinvest proceeds in Canada. So this is interesting. This doesn't really specify whether it's corporation or individual. There's no cap on amounts, and it's a tax deferral. So presumably, as long as you take any gain from any type of investment and put it back into a Canadian investment, you'll have to pay no capital tax gains. I can think of one compelling thing to put that back into, which might be Canadian real estate. So, Steve, what do you think of this plan, and any your thoughts in general about
Oh,
whether
me to
there's
go
differences?
first. Yeah, I mean, obviously, the US has a similar program called the 1031 exchange. Effectively, if you, yeah, it's you have to exchange it for a like kind investment. So, like, I'll give you an example. Like, for our users or listeners that aren't, maybe familiar with what the US does is, if you have, let's say, a development company that or an investment company that buys an apartment building. It's an old crappy apartment building, it's run down, so they'll go in there, they'll fix it up, they'll push the rents up, whatever. They're expending capex, they're making an investment into the building. Let's say 4 or 5 years later they sell the building, they can then reinvest that capital into a similar asset and then sort of redo it again and basically defer those capital gains. So I mean, obviously it spurs more investment. I mean, I'm sure the argument that John will point out is that should this sort of capital incentive, tax incentive, be applied to real estate, or should it be focused on other parts of the economy? And so I mean, that's certainly up for debate. I mean, my view is like, I think you can only command and control so many things. I just say let the market figure it out. But I mean, that's kind of my political ideology, I suppose, where I'm more of a free market guy to say, listen, let people defer their capital gains if they're going to reinvest in Canada in whatever business that is. We have programs like that here in BC where BC government, for example, will give you tax credits if you invest in shares of mining companies and startups and things of that nature to obviously incentivize people to deploy capital into that space. So Pierre's, I guess, policy basically just expands on that across country and in all aspects of various asset classes.
So you're good with it, even if it's for houses.
I just think the market's going to take care of it. Take
What does
take
that
care of it.
mean, though? The
Now,
market.
hold on, John. So let me expand on that. It's the U.S.'s 1031 exchange. I'm assuming Pierre's would have something similar. We don't know all the details,
Mhm.
but the U.S. is you cannot do it for a primary investment, a primary use for like you can't use it for your single
House for
family.
second home. Yeah. Yeah.
Yeah,
It's got to be an
it's got
investment
to be like
property.
it's got to be like an actual like legitimately it's a legitimate business that is
Sure.
investing and deploying capital. So that's how the US's looks. I'm assuming Canada would be somewhat similar. I don't know. I don't have an issue with that personally, but I think the market will take care of itself. If there's money to be made in real estate, the capital will go and into real estate. If there's no money to be made, which we just talked about, I think you're going to probably I think you're just fundamentally in a period of real estate and housing where the returns have been so good for the last 2 decades that I think the next decade is going to be it's going to be paltry. I think it's going to be, and so I think that at the end of the day, it's like if you want more housing and real estate, you ultimately need more capital in that market. That's my opinion, but
All right, so I will obviously disagree. I mean, I'll agree to some extent. I mean, I don't entirely disagree. I mean, I think there's a role for it in housing, for the examples that you talked about. And an even better example is actually a company that builds purpose-built rental. They hold on to it 3, 4, 5 years. A lot of the big builders right now that are sitting on condo projects that are frozen are not landlords and are not in the landlord business. So, you need some incentive for them to build a purpose-built rental and then eventually get it off their books so they could build more buildings. Like they're builders. They're not landlords, right? So, this is a good project where it gives a financial incentive to a builder to convert their condo project into a rental. After several years, they sell it to further capital gains. So, this is an example where I feel like it's giving the desired outcome, right? Which is more housing. I think the problem is in Canada with giving a tax incentive to investors who are buying homes in the suburbs and using them as investments are the wrong incentives.
and they would get that, correct? So if I'm in a pre-sale guy and I go buy a pre-sale duplex in the burbs, I can hold that, rent that out for 5 years and then do a 1031 exchange,
yeah. So
assuming if it's held
But the
corporately.
1031 you're introducing, Steve, like so far, we haven't heard from
no, we
Paul.
don't have, yes.
We don't have that distinction even.
And to
Like
be clear,
that's a refinement that we would need to see,
And
no?
to be clear, I'm talking about what I'm talking about, like single family homes. So I don't know if duplex would qualify, but something that's multi-unit, say 3, 4, 5 units, like small, those are not owned by families. Those are in investors. If you want to keep them exempt too, sure. But the homes that the average person is competing with, I don't think we need tax incentive. We need like tax, I think, which some might not agree, disincentives. And for two reasons. Number one, there's so much capital flowing into single family homes. Homeownership rates are falling. People can't afford a home. It's shutting the next generation at home ownership, which I think is the first problem. And the second problem, which is very well documented, is that because so much of Canada's capital is flowing into parking money in homes, like our productivity is terrible. So I think we need like a disincentive so people start investing in businesses that create jobs rather than just sitting on condos and houses. I think it's like a backwards economy. Like we've made it so lucrative and profitable to just sit on a house. Small businesses don't want to invest in their business. It's cheaper to just buy a bunch of houses.
Well, so yeah, I agree with you. And then the point is basically how do you get like how do we get there and then how do we solve it? And my argument is that I don't think all levels of government in this country have made operating and owning a legitimate small to medium sized business is actually very favorable. I mean, I
But
don't think
here's
it's
what, so Steve, here's where I think Trudeau totally failed with the introduction of this. And I wish Carney, if Carney thinks about it, they should have introduced it by saying that this only applies to real estate investment. and it
what?
would
I
not
don't
have
even think
caught.
all real estate investment, maybe like single family type homes, sure.
Well, they should have gone after who they were after because in their net, who they caught is a lot of small and medium businesses
Yeah, exactly.
whose
On
capital
the
gains
capital
over
gain stuff.
Yeah, exactly. That
250 were
100%.
taxed,
And that's why I agree with you. That's a
which is
disincentive to
completely
start a
past.
business.
Yeah, now I guess my last comment on this would be Steve, to you. I guess I know you had a big exchange with Eric. I forget his group's name.
The more
The
neighbors people.
Yes. So, and I
Oh,
forget
those
his
are the
last,
worst type of people.
yes. But the argument from Eric's group is really that it's the younger generations that have no capital to gain, that are consistently upset because this widens the wealth gap. I guess but to both of you, is there any chance that, so that's why I think Trudeau attacked the capital gains because it was very popular. This attacks what allows people with capital to make more capital. Carney's just said, okay, I'm not going to go ahead. At least Pierre has gone in and said, fine, but he's turned it onto this Canada first model. Do you think that will make any impact?
Which part? The
Just the idea that, I think viscerally that
of
making,
Pierre's plan, if
yeah, the
Pierre's plan will make a
Canadian aspect,
difference.
the Canadian aspect.
Listen, I think it depends on how you deploy it. I think one thing that people are missing is that they think any capital gain in any investment is going to be tax sheltered, right? So you sell your real estate, it's tax sheltered. You can put it in a Canadian ETF. That's also tax sheltered. That's not going to happen. Like, there's no way that's going to happen. Like, to Steve's point, if it was to happen, it would have to be similar types of investments, right?
All right.
So, and I don't
Can
know.
I,
Yes.
yeah, so I mean my sort of point or emphasis is on I think people only invest in, let's say, Canadian real estate if they feel they're going to get an outsized return. I'm better off putting my money in this pre-construction condo than I am doing X, Y, or Z or Z or whatever you want to call it. So, and I think the only reason why, the long answer is the only reason why we got to this point. I mean, how did we get to the point where people think it only makes sense to continue to plow capital into, houses in the suburbs? It's because we had, a decade of zero interest rate policy. We had immigration that was irresponsible. And then we had, I think, we had a flood of foreign money that came in here, parked bags of hockey bags full of cash, a lot of it illicitly. And so we created this environment where houses went up 20%. And when houses go up 20%, everybody rushes to jump in and buy a house to hold it for 3 years and flip it for more money. And so I think what's happening now is all this sort of excesses are deflating and coming out of the market. And I think naturally that sort of speculative mindset is going to come back out, and people will hopefully, if we can create an economy that incentivizes, again, small, medium-sized businesses and places to park your capital elsewhere, I think it discourages the mom and pop from buying a third condo.
Mhm.
So it's just really just like we're kind of going in circles about like how we get there and how we solve it. But I mean, I ultimately think it's kind of taking care of itself. It's funny, right? I mean, there's always these ways of like at the end of the day, you still need capital and you still need investment to build new housing, whether it be purpose-built rental or development. So how do you
Yeah.
sort of attract that capital? I mean, Bob Rennie, who's advising Mark Carney, says we should remove the foreign buyer ban and we should, allow 25-year terms through CMHC to rent out to foreigners and have the foreigners come in and buy individual units and put a charge on the title that says you cannot sell this unit for 25 years and here's a cheap loan to hold it. Like, is that the way to attract capital? Is that the capital that we want in this country? I mean, so everybody's got these ideas of how to do it and how to get there. I mean,
Well,
and I don't
Steve,
know.
if I can move on to our last round, I don't even think Mark was convinced by that because it is not in Mark Carney's big
It is
housing
not, and I think
plan.
realistically, I mean,
His,
politically, that
I
is a
think he
horrible
knew that
selling
would
point.
probably not go well. How are we doing on time? We had so much to discuss. I want to get to a last minute rapid fire on the overall approaches
Mhm.
of Mark Carney versus Pierre Poilievre on housing and just how they would use federal power. Because I
Mhm.
think two kind of different approaches are. So are
Sure.
we good for 10?
Sure.
10 minutes?
Yeah.
Yeah,
Okay.
yeah. You give us a rundown of their things and maybe we'll chat
For
about them.
sure.
Let's do it.
And I'll score this last round before we move on. So what I'm hearing here is, from Steve, why do something, why worry about something that the market will take care of itself? If investors can't make money, it won't allow them to cannibalize the market. And John, what I'm hearing from you is investors have always cannibalized our market. They've found a way, and any more incentive to do so, they will find it. Because in Canada, unfortunately, owning houses is the best business and has been for a very long time. So let's move on to our last, the approach. What I'm noticing with these housing plans, I'm going to throw up Mark Carney's on the screen here first. He's just announced what he's calling the largest housing plan since World War II. Announced it at the time of taping yesterday, which is March 31st. There's a lot in his plan. I'm going to put it in the show notes, but let's just pull up these two main pillars. Get the government back in the business of building. Act as a developer to build affordable housing at scale, including on public lands, catalyzing the housing industry by providing over 25 billion in financing to innovative prefabricated home builders in Canada, including those who use Canadian technologies and resources like mass timber and softwood lumber to build faster, smarter, more affordably, and more sustainably, providing 10 billion in low-cost financing and capital to affordable home builders. And I'm going to throw up the second section here. Cut red tape and make it easier to build. Cutting municipal development charges in half for multi-unit residential housing while working with provinces and territories to keep municipalities whole. So that seems like would be providing some funding there. Reintroducing a tax incentive, which, when originally introduced in the 1970s, spurred tens of thousands of rental housing across the country. Facilitating the conversion of existing structures into affordable housing units, building on the success of the Housing Accelerator Fund, further reducing housing bureaucracy, zoning restrictions, and other red tape to have builders navigate one housing market instead of 13. Whew.
Beautiful.
Who
Now,
wants to go first? What do we think?
I mean, I'll chime in quickly. And I think we talked about this off the record. I mean, I'm not a Trudeau fan, but I think he did say something that he was probably not that far off on, which is I don't think the federal government, they don't really have, there's only so much they can do. Okay. So I think Sean Fraser, he had some good ideas around the Housing Accelerator Fund. Listen, we'll give you cash if you remove your zoning. Sounded good on paper, made sense, but in execution, it really, to be honest, it hasn't really worked. What we've seen is they've been able to unlock zoning in some municipalities, and then these municipalities immediately turn around as soon as they cash the check. They go and raise their development cost charges and make basically effectively they are removing the density through higher charges, making the projects no longer economically viable. So like it was a good in theory. And then, the question is, should they be a developer? Should, Mark Carney and the team be developers? I mean, I think they have a small role to play. I mean, I'm always weary about government stepping in and playing too large a role and crowding out the private sector, but I think it's all in the execution, really. I mean, can they step in and fill a void when housing starts are rolling off a cliff as they are now? Yeah, I think arguably they probably can and should.
all right.
John.
I'll give it my kind of takeaways, the good and the, I mean, meh. The good I think are the one program which they didn't talk about, this tax incentive to builders. It's called MERB. Was it multi-unit residential? I mean, I
Please
forget.
spell it out. What
I know.
is MERB?
MERB is a program in the 70s. What it is, multi-unit residential building. I mean,
Okay,
that's it.
beautiful.
And the
MERB.
program
It
was called
sounds like
that.
a name from the 70s, so
I
that
know.
works.
And it was basically a tax incentive to builders that basically allowed them to depreciate the cost of their assets faster, which basically lowered their taxable income in the early years. And this was a really big tax benefit. So that could be a huge incentive combined with the reduced development charges, which again, they said are going to be on multi-unit residential buildings. And given we're not building condos, that's going to be purpose-built rentals. So we have two potentially huge tax advantages to convert condos to purpose-built rentals. I think can be huge and can actually lead to more housing. Can they double housing the way they're promised? I think zero chance. I mean, there's no one doubling housing completions anytime soon. All this stuff about becoming builders, I think that's more political than anything. There's like the government, whatever they do is going to be on affordable housing, which for the most part I read as non-market housing, like below market rents for people who cannot afford market rents. It's probably means tested, which means they check your income. So they're not going out and building detached homes for families. Like they're building on public lands for non-market housing, which is good. I think we need that. That's a component of the housing system that we need, but
Yeah,
it's
which is
not.
fair, right? Because John, the private sector realistically isn't going to build that
They're not
housing.
going in there exactly, and they're not building. They're going to partner with the builder, but at the end of the day, they're going to own the assets, right? They're going to manage it because that's what you have to do with public housing. I mean, the private sector is not going to build that, so. I think that's fine again, but it's not going to change the market dramatically, but it's going to help people who need obviously subsidized rent. So overall decent. Is it going to like change everything tomorrow? No, but I think the rental thing can actually be pretty huge.
All right. And to be fair, while we haven't heard from Pierre Poilievre, I think we should note that back in 2023, over 1.5 years ago, he did make a very big investment in producing a documentary and a housing plan. I'm going to throw up the highlights on that, what he called my common sense plan, because I think it does show a little bit of what Poilievre's approach to housing would be. Require big cities to complete 15% more home building per year as a condition of getting federal infrastructure money. Two, giving building bonuses to cities that exceed the 15% target. Dollars should be based on housing completions, not promises. Three, require every federally funded transit station be permitted for high density apartments around it and withhold the federal transit grants until apartments are built and occupied. And four, sell off 15% of federal buildings and thousands of acres of surplus federal land suitable for housing. Now, both of you already talked about your comments to that plan when it was released. It's in our show notes. But what I find interesting, and assuming Poilievre is staying with this kind of approach, from a policy nerd kind of point of view, I do see a bigger difference sort of between Poilievre and Carney. And I would even argue between Carney and Trudeau. And the difference I'm seeing is seeing the approach of using federal power. Poilievre and to an extent Trudeau largely relied on this idea of giving funding for things that would incentivize the kind of building they'd want to see. What I'm seeing Carney talk about is 35 billion in financing, using the federal purse for financing to incentivize the kind of building that they want to see
Mhm.
in sustainable homes or the modular homes and things like that, affordable homes. So I personally think this is interesting because I would, like Steve has said, argue that the only thing that has changed housing in Canada under the Trudeau government was the use of financing through the CMHC to
Mhm.
get more purpose-built rentals up. That financing push is the only thing that has really changed the market on that front. I agree with Steve. All these little bits and pieces all around it, funding here, funding there, I didn't think made an impact. So
Mhm.
personally, I'm excited to see more use of the finance purse. Financing means builders pay back the loans when they succeed. It allows the government to see if this sector is not paying back and they're not great, we redo more of the same in another sector.
Yeah.
Personally, I think it's a smart way to go about it. Although I do take our previous guest Ben Rabidou's point, make it counter cyclical, please. Don't put fuel where investors are already going crazy.
Well,
But
yeah. It sounds like that's
personally,
what they're trying to do now because the construction's going to fall off a cliff soon, right?
right, so they're trying to, this would be counter cyclical.
Yeah.
And so that excites me. I
Mhm.
do see a bit of a difference from
Yeah.
Carney. Maybe it takes a banker to see it. I don't know what both of you think as a final thought on that.
I mean, a little bit. And I think to be fair, because we're recording this at a time where, I mean, maybe Poilievre's conservatives are going to make more announcements. I mean, possibly even tomorrow after a recording. So they've made a couple, obviously, but we haven't seen too many more new ones. But I would not be surprised if they have more announcements between now and the election on housing. So I think it'll be interesting to hear that. But I agree with you. I think this whole idea of governments financing rather than just cutting blank checks to whether it's municipalities. And to Steve's point, it's kind of one of the things I didn't like about this housing accelerator funds. Like if you legalize fourplexes, here's $300 million or
I
something
call
like
it the
that,
bits
right?
and bobs
Yeah, I
major
agree.
plans. And both of them kind of had that, right?
Yeah.
Trudeau and Polyev. You know,
Well, yeah, I mean, at the end of the day, it's the challenge was again, you'd kind of cut the check, but the project wouldn't be economically viable. So, I mean, on the flip side, it's would Pierre's be on completions or on housing starts? I mean, that's we don't necessarily know. I mean, obviously, I think it makes more sense to say, hey, here's your money after you approve this many housing starts. I mean, again, it's not going to be perfect. I don't know. I mean, I think at the end of the day, and I've said this to you guys off the record, I think from the federal side, there's things that you can do. I think the CMHC program for purpose-built rental has been the best program that clearly you can see in the data has worked. Um, is ultimately running an economy that works. And I think immigration's been the big one that killed us over the last 3-4 years, right? I mean, if it doesn't matter how many new programs, housing programs you run and you announce, but if if you import 1 million people a year, you have no chance. And so I think the federal government really needs to take care of that side. Obviously, we're getting it under control now, but I mean, I think it ultimately comes down to a lot of the provincials and municipalities to play ball, as we've seen with these housing accelerator programs, right? It's like the feds had a reasonably good idea, and the municipalities kind of found ways to screw it all up.
but you guys don't think it's a bit different when you say, hey, financing is available to builders who are doing what I want you to do. So we don't have to
The
rely on
financing
the
is already
funding
available.
transfers, right? Just
I'm
the way the builders went to CMHC to do their purpose-built housing. So that's the one thing I do think is different about 35 billion in going to builders
So but I
and
think to be
financing.
clear and to answer Steve's question, what I think this program is more about providing funding to companies that are doing like modular buildings to expand their operations, to grow their businesses, to do more of that
And
type of
targeting
construction.
Canadian technologies
Yeah,
so that Canadian home
that's what it
building
sounds like to
can
me.
get
Yeah.
more efficient, which I think, hey, if Canada's going to be obsessed with real estate, why don't we become better home builders and
Oh yeah, we
export
Yeah.
yeah,
that around the world? That
100%.
would be great. And then the second part, so I agree. What he's doing is, if I think it's taking the idea that, hey, financing helped the rental part.
Mhm.
Now let's move it to bumping up the modular home and Canadian technology and softwood lumber. It's also good counter-cyclical when we can't give our softwood lumber to the States or trade it. So that's another good counter-cyclical there. But and now he's expanding it to maybe affordable housing. Anyways,
I
I
agree.
do think there's a difference between financing and funding,
I
but
agree.
we'll
I agree
have to
100%.
see if my gut instinct is right.
Mhm.
But that's the only thing that I can see, quite frankly, as being even different from Trudeau,
Mhm.
because a lot of the other stuff in Carney's is the bits and bobs
Mhm.
approach. But I don't know, that 35 billion in financing two builders is interesting to me.
Yeah, we'll see how it all
Interesting.
plays out.
Yeah.
By
All right.
next episode, we'll have potentially a new prime minister or the same prime minister
Yes.
just elected by the people.
We'll see.
We'll
And by
see.
then, we'll see if the US has maybe run out of a bit of steam
Yeah.
on all its talk. And are we hitting a bit of a normal? When Canadian weather improves, so do our spirits. I don't care about those people who say stop talking about the weather.
Mhm.
I'm Canadian. I'm going to leave it there. So
There you
Go
let's
go.
for it.
see if May finds us in better spirits. Thank you, John and Steve, for helping us evaluate these proposals as we go to the polls. I think it's very important. To all our viewers and listeners, thank you so much for your support. We're going to put the show links to the various political platforms we've discussed. We discussed the two major leading parties, and their links will be in our show notes. So to all of you, we'll meet you again here next month. Vote whatever you do.